Right now, at this very moment, there are approximately $6 billion in Bitcoin short positions stacked between $72,000 and $73,500. $6 billion of bets that Bitcoin is going down. And what just happened in the last 24 hours could either destroy every single one of those positions or prove them right in the most painful way possible. At the SUI Basecamp conference in 2025, Raoul Pal said something that every person holding Bitcoin needs to hear right now. He said, they don't want the system to break. Every time something happens, they inject more liquidity. They are giving you free money. And to take that money, you need the volatility. The volatility just arrived, and it brought $6 billion of potential rocket fuel with it. Let me walk you through exactly what happened, because the next 48 to 72 hours could be the most important window for Bitcoin in all of 2026. On Saturday, April 12th, something happened for the first time since 1979. American and Iranian negotiators sat face to face. The location was the Serena Hotel in Islamabad, Pakistan. The talks lasted 21 hours. 21 straight hours of negotiation over two things: Iran's nuclear program and who controls the Strait of Hormuz, the narrow waterway between Iran and Oman that carries 20% of all the oil consumed on this planet every single day. After 21 hours, Vice President J.D. Vance walked out. He told reporters that Iran refused to accept their terms. The US wanted Iran to give up its nuclear program completely. Iran wanted to keep control of the strait, demanded war reparations, and insisted that Israel stop striking Lebanon. Neither side moved. Hours later, Trump went on Truth Social and dropped a bomb that shook every market on the planet. He announced that the United States Navy would blockade any and all ships trying to enter or leave the Strait of Hormuz. Effective immediately, US Central Command confirmed the blockade takes full effect today, April 13th, at 10 a.m. Eastern Time. Think about what this means. Iran has already been blocking most traffic through the strait since the war began on February 28th. Now the US is blocking traffic from the other side, two superpowers choking the same waterway that carries 20% of the world's oil. Over 230 loaded oil tankers are currently trapped inside the Gulf with nowhere to go. Oil exploded. Brent crude spiked above $105 a barrel. West Texas Intermediate jumped 9%. Bitcoin dropped from above $73,000 to $71,000. Over $184 million in crypto positions were liquidated in 24 hours, with more than 100 million of that coming from longs that got wiped out. If you own any amount of Bitcoin, subscribe and hit the notification bell right now. What I am about to explain is the setup that will determine whether you make or lose money this month. Now here's the part that the headlines are missing. The part that could turn this entire situation on its head within days. While everyone was panicking about the blockade, a separate report quietly dropped. CoinDesk reported that as the US blockade goes into effect, Iran is considering the abandonment of uranium enrichment as a way to end the war. Iran may be surrendering its nuclear program. If that happens, here is the chain reaction, and I need you to pay close attention to the math. A deal that reopens the strait will crash oil from $105 back toward 85 or 90. That kind of drop would instantly relieve the inflation pressure that is preventing the Federal Reserve from cutting rates. Risk appetite would flood back into every market on earth within hours, and those $6 billion in Bitcoin shorts sitting between 72,000 and 73,500, they get destroyed. When shorts get liquidated, the traders will bet against Bitcoin and are forced to buy Bitcoin to close their positions. That forced buying pushes the price higher, which triggers more liquidations, which forces more buying. It is a cascade, a short squeeze. Analysts are saying a sudden oil drop on a peace deal could trigger a squeeze that sends Bitcoin from 71,000 to 75,000 and potentially to 80,000 within days, not weeks, days. Because the fuel for the move is already sitting there, $6 billion of it, just waiting for a match. But I would be lying to you if I did not explain the other side with equal honesty. Because this is not a guaranteed trade. It is a fork in the road. If Iran does not surrender, if the talks stay dead, if the blockade tightens and oil pushes to $110 or $120, then Bitcoin is in real trouble. Higher oil means higher inflation. Higher inflation means the Federal Reserve cannot cut rates at the April 28th meeting. No rate cuts means tighter liquidity, and tighter liquidity means risk assets fall. The IEA chief Fatih Birol warned last week that the oil supply shock could be worse in April than in March because the emergency stockpile releases that cushioned the first month have all been delivered. Those reserves are forecasted to run dry in mid-April. If the blockade holds and no new supply comes online, the IEA recently described this as a supply shock without precedent in the modern oil market. If that scenario plays out, Bitcoin's next support is 65,000, below that 62,000. And if oil goes past 120, the fear gets truly ugly. So here is the picture. Either Iran blinks and the biggest short squeeze of 2026 launches Bitcoin toward 80,000. Or Iran holds firm and oil drags Bitcoin back toward the low 60s. Both moves will be violent, both could happen within days. If you are getting value from this breakdown, hit the like button right now and share this with someone who holds Bitcoin. They need to see this before they panic sell into one of the biggest setups of the year. Now there is something important that most people are overlooking in all the chaos. Bitcoin's reaction to this blockade was remarkably contained. Think back to February 28th when the war first started. Bitcoin dropped from 74,000 to 60,000, a massive crash. Now look at what happened this weekend. The talks collapsed. The President of the United States announced a naval blockade of the most important oil choke point on the planet, and Bitcoin dropped 2%, from 73,000 to 71,000. That is it. The market is getting desensitized to war headlines. Each escalation produces a smaller and smaller reaction. In market structure terms, that is what bottoming looks like. The sellers are exhausted, the weak hands are already out. The people holding Bitcoin at 71,000 after 46 days of extreme fear, a war and a naval blockade are not the kind of people who panic sell. On-chain analyst Michael van der Poppe pointed to 3 indicators all hitting record lows simultaneously, which he said signals that Bitcoin's price may have already found its floor. BlackRock's IBIT fund pulled in $358 million on Thursday before the talks even began. Institutional money is still coming in despite every headline screaming danger. And this connects directly to what Raoul Pal has been saying for months. At his September 2025 masterclass, he laid it out clearly. He said, this is the 12 months where maximum money printing comes. The biggest macro variable of all time is that global governments and central banks are increasing liquidity to manage debt at 8% a year. The blockade guarantees more spending, more naval deployments, more emergency oil measures, more economic disruption that will require government intervention and stimulus. Whether the war ends this week or continues into May, the money has already been committed, the debt has already been added, and the money printing required to service that debt is coming regardless of what happens in the Strait of Hormuz. In February, when Bitcoin was in free fall, Powell posted on X, the crypto cycle is not over. That is an alluring narrative trap reinforced by continued daily price declines. 2 months later, Bitcoin snapped its 5-month losing streak. March posted the first green candle since August 2025. And the institutional flows confirm its thesis. ETFs absorbed $1.6 billion in March, while the Fear and Greed Index sat at 8, the lowest sustained reading since FTX collapsed. Now let me give you the exact timeline you need to watch this week, because every date carries weight. Today, April 13th, the blockade takes full effect at 10 a.m. Eastern. Watch how oil prices react once trading opens fully. If Bitcoin holds 70,000 through the day, the floor is strong. April 15th, reports suggest another round of talks could happen as early as Tuesday. If Iran signals willingness to negotiate on its nuclear program, oil could drop below 100 and Bitcoin bounces towards 74,000 April 22nd. The current ceasefire expires. If no deal is reached by this date, the war could re-escalate significantly. This is the hard deadline, April 28th and 29th. The next Federal Reserve meeting, with oil above 100, the Fed almost certainly holds rates, but the press conference and the language Powell uses about inflation will determine whether markets see any hope of cuts in the second half of the year. Everything between now and April 29th is connected. The blockade affects oil, oil affects inflation, inflation affects the Fed affects liquidity, and liquidity, as Raoul Pal has demonstrated with 90% correlation, drives Bitcoin. So here is the honest bottom line. Nobody knows whether Iran surrenders or digs in. Nobody knows whether the April 15 talks happen or collapse before they start. Anybody who tells you they know with certainty what Bitcoin does next is either guessing or lying. But the data gives you edges. The shrinking sell-off reactions suggest the bottom is forming. The 6 billion in stacked shorts provide the fuel for an explosive move higher if the catalyst arrives. The institutional flows show smart money is still buying. And the liquidity cycle that Powell has been tracking for 15 years says the money printing wave is coming regardless. In the 2024 Wealthy interview, Powell described this exact kind of moment. He said in 2008, the central banks discovered the money printer. The money printer is essentially debasing the currency by printing more currency. Now it's dressed up in a nice term called liquidity. He then said, we are exchanging a debt crisis for a slow debt crisis. The slow debt crisis is the printing of money. Never blockades, failed peace talks, $105 oil, two superpowers choking the same waterway, 6 billion in shorts loaded like a spring, and a money printing cycle that is just getting started. This is the volatility Raoul Pal said you would need. The question is whether you run from it or harness it. If this changed how you see the next 2 weeks, subscribe, like, and tell us in the comments. Do those 6 billion in shorts get destroyed, or does Bitcoin fall to 65,000? We read every single comment, and we will see you in the next one.